Hello, and welcome to National Fintech Organization and this next installment in the series, NFO's Growth Garage, Get Smart and Get Connected. Today, we'll hear from James Stevens of Troutman Pepper, Chris Black of Thread Black Bank and Thread Bancorp Incorporation, and Melissa Eggleston of MBKC Bank. And our moderator for today is Robert Zondag, CTP of Whipfleet. They will discuss current trends in the industry and share their expertise. All attendees are in listen-only mode, but the chat feature is available at the bottom of the window for comments and questions. Please give it a try now and let everyone know what part of the world you're connecting from. As we go along, add your questions for our panelists. This session is being recorded and will be available on demand within the next few days on the NFO's YouTube channel. And now I'd like to hand it over to our moderator to get started. Robert?
Thank you very much. Hello, everyone. We're excited to have the discussion today surrounding banking as a service and have our panelists share their insights with you. Chris, James, and Melissa, thank you for being here today. I know each of you has expertise in fintech and banking as a service from different perspectives. Perhaps we can start the conversation today with your observations on the current state of banking as a service. Chris, would you mind starting us off?
Yeah, no, happy to be here. Thanks, Robert. Thanks to the to NFO and everyone for joining us. You know, our position is the same as it's been since we entered this business about 3 years ago, a little over 3 years ago. We actually refer to it inside Thread as embedded banking. I know, a lot of folks like to use the as a service part. We think the embedded banking really denotes what we're doing, which is the same as it ever has been for banking, which is innovated from the beginning of time of the first banks thousands of years ago to deliver banking services, products, and we're just doing it in a modern way. So instead of and that's why we call it embedding, which is now about where the customer is doing their business, their banking, as opposed to it being more about the bank, which I think has been the traditional paradigm. So, instead of customers having to come to the bank or the bank's ATM or the bank's website, we're taking banking products through, modern technology, API connectivity into where they're doing their business, mostly small business customers, but also select consumer offerings. And so we think about it really simply in that way. And this is a trend that's been ongoing for really decades now. And I think it's, picked up a lot of momentum, a lot of steam, therefore, a lot of challenges along the way. But, we're extremely enthusiastic about the state of the opportunities, where the market is today. And, challenges tend to, in the long run, make everyone much stronger. And that's really how we view the current environment.
Thank you, Chris. James, how about your views?
Well, I agree with everything Chris just said. I think that, we're seeing just a tremendous amount of growth, and we'll think that we'll continue to see that growth and continued flourishment of the people that do this well. I guess I am the lawyer here, so I'll be the guy that talks about regulatory scrutiny for a minute. There is some, and I think that part of that is because of the success that has happened in the past couple of years around these embedded banking. Let's just go with that. These embedded banking product offerings. This is something that used to be a little fringy, done kind of by a couple of dozen banks, and these days it's done as a sort of a line of business or something more meaningful than one or two by a lot more banks. And the ones that some which are on this call, that are doing this in a big way or are doing more of it. And I think that increasingly we're seeing a lot of our bank clients that are maybe just, looking to have a partnership or two to fill out a part of their balance sheet or to figure out a way to drive new loan, deposit, payments, whatever the product that's being offered might be business. And so, as things grow, it gets a lot of attention. People look at it. It's not on the fringes anymore. It's front and center. And so we think a lot of scrutiny is really based on that. We also think the scrutiny, I think that I read, I'm tired of reading it, honestly. I read a lot about, is it the industry, or is it the structure or the model, or maybe, I don't know. It seems like people are asking for more regulation. I don't really understand. But at the end of the day, I mean, I think sometimes when things fail, it's just the participants, right? I mean, people, maybe not to be, painting everybody with the same brush, but things that we did 3 or 4 years ago, we know now of ways to do those things better. And sometimes, you're supposed to do due diligence on your partners, and you're supposed to have really strong agreements with your customers, and you're supposed to your partners, and you're supposed to oversee them. And when those things fail, it causes programs to fail. And so, we see a lot of scrutiny that is a lot of times directed at the failures of the program or the participants themselves. And I hate to say that. I'm not trying to paint anybody particular, but I think it's a lot better than saying the entire industry is in trouble. And so I'm trying to make it very clear the way I think about it. But again, I think the future is bright. I just don't see how customer acquisition and product development and the customer service that you can do through these embedded banking methods is going to decline. It's only going to get more and more, and people are going to get better because of this challenging period that we're going through from a regulatory scrutiny standpoint.
Yep.
Certainly, Chris and James, embedded banking is here as part of our customer experience, our customer journey, meeting customers where they are. Melissa, I'd love to hear from you. I know you have experience in this with programs and financial institutions.
Yeah, thank you, Robert. Good to see everyone today. We remain, much like Chris, really excited about the landscape. 6 years ago, when we strategically went on this path, we said, what is it going to look like for us to have meaningful long-term partnerships with fintechs and brands who wanted to bring a bank product or service to life? And so, we see all the regulatory scrutiny out in the industry as well. And I think there's so many headlines that are really, really negatively focused around banks or partners that maybe haven't got it exactly right or could adjust their model and things along those lines. But ultimately, we take those learnings, and I think the industry will be better for it. We look at it and say, from an internal perspective, what can we be doing differently? What should we be doing differently? I would say our regulatory relationships have been very, very important for us over the course of the last 6 years, and we remain really close to those folks on new initiatives, new areas of business, things along those lines. It's like communicate often and regularly, and I think you can stay on the right side of things. Outside of that, our agreements and our direct contact with our partners has been very, very critical and vital to our success. We are not a hands-off. And I would say, from our perspective, that's been super meaningful and very, very important as we've scaled and continue to build that part of our business.
Yeah, Robert, if I could add, Melissa, I think that's all really good and wise counsel and good insight. There's nothing new under the sun. That's how I look at this. It's a cyclical industry, and that involves innovation and then regulatory response. And so I just don't, we look at this, the hurricane, if you will, is blowing harder perhaps than it has in the past, and more intense. And I think that's going to weed out the people who are not committed versus committed. And frankly, the ones, I think the regulators do have concerns in areas, and they'll use the process to kind of do some of that separation as well. But this is not dissimilar to whether, commercial real estate cycles, asset-backed lending, securitization, all these things. It's the typical way. And these certainly are not excuses at all. It's just things, this is the way innovation and new approaches to doing business and banking work. It's a natural process. Part of the natural feedback of that is banks, participants, partners taking it really seriously and understanding how critical it is to work with regulators, right? To understand, to admit when you have shortcomings, to admit when, hey, this didn't go right, and here we're committed to fixing it. None of us are perfect here, and also having allowance for the regulatory resources. They have a lot to keep track of, a lot going on. And to recognize that they're humans too, and they're trying to keep up with the times, while also allowing banks to have freedom to execute their business model. So it's complex, but it's not new. It's not different. And, and also, and these are not excuses, but loans go bad, right? We've been doing it for a long time. And the best banks in the world have loans that go bad because even despite their best underwriting, despite the best diligence, people are still people and things happen. And I think we have to keep that, in perspective, and really approach it from, this is an industry, a segment of the industry that's maturing, and the opportunities are extremely significant for those who do it the right way. Doesn't mean perfect at all. Like, it's more about what are people doing that I care about as opposed to what they're saying or what headlines might be saying. So I kind of don't pay much attention to that. I want to talk to people directly and understand, and what do we learn from that? What do we do? And what's our response?
I think that's a great point of view, Chris, kind of that enterprise risk management, saying we need these technologies or we need this for our customers.
Yeah.
How do we properly manage it? Do we go to someone like James that can help us construct the right legal, contractual obligation or operationalize it? It sounds like you're doing, Melissa, and keeping our regulators in touch with where we are and what we're doing. Maybe the group, we can talk about another impact that's facing the industry. That's open banking, something that's common in other parts of the world, but not here in the United States. From recent remarks by the Consumer Financial Protection Bureau, the CFPB leadership, it's anticipated that open banking rules, known as Section 1033, might go into effect this fall. Maybe we could discuss the impact of open banking, the right of portability, some of these concepts that we're hearing out in the space right now, and its effect on embedded banking. James, would you mind starting us out on that?
Happy to. 1033 is a rule that is going to require providers of financial products to make customer information available, can't charge fees for the access, and consumers are going to be allowed to grant consent to third parties to access that information, in a nutshell. And I think that is a potential treasure trove of new data that's going to be available, or new data sources that's going to be available to fintech companies and the banks that partner with them. I think that enabling this consumer control is going to encourage more flexibility, more rapid movement to different products and services. It's a new regulation. It's going to have lots of problems. It's very unnerving to look at it and think about it. But I think that in the big picture, more readily available information that can move around more freely is going to encourage further innovation.
Great. Thank you for explaining 1033 and giving some particulars on it. Melissa, love to hear your opinions on this kind of open banking.
Yeah, I'll probably speak a little more in general about just data and the access to data anyway. Like the companies today that are leveraging our data, whether that be embedded finance, making recommendations to us. I mean, banks have done this forever, other companies, social media, things along those lines. So for me, this is just a continuation of, to James' point, some innovation, catching up, making sure consumers have some control. We obviously follow all the proposed regulation very, very closely and consider how it could impact us. But until it really happens, we keep a little bit of a back lens and don't necessarily make a bunch of adjustments or plan for a business around that, but certainly care about it, want to make sure that we have our eye on the right things. Contractually, we have a lot of language in our contracts with our partners about who owns the customer, who has access to that data, where that data can go. And so this will just expand and expunge on some of that.
Great. Thank you, Melissa. Chris?
Yeah, maybe to expand, it's a pro and a con, like most things. I think the data security and customer privacy is a huge concern. I'm not sure it's been worked out or thought through very well. I do know who most fingers get pointed at in these situations, and it's typically the banks. So I think that is a big concern, I'm hopeful that all the agencies together will work closely with industry groups and attorneys like James and many groups that we're engaged with to fully understand the implications, and that it's not going to be perfect, and we usually have these issues, and that there's a grace period in that. But I also think there's a real downside and it highlights the very reason that thread, why we're doing what we're doing, why we came in, a group of investors, we partnered with a 100-year-old community bank. We fully embrace that. Our small bank operations in East Tennessee are thriving. The people are doing really well. We've integrated many of them into the embedded banking kind of everyday, absolute critical members of the team. And so, we will have and will have preserved and saved that charter and that community banking charter. And over time, we'll really be deploying modern and front leaning technology into the traditional community bank that we have, and that's terrific for that community. It's terrific for that bank, for the people who we serve there, who are on our team there. However, the many thousands of community banks around the country who aren't able to do this, don't know how, are scared, are nervous, have been told it's too complicated for them. I think this open banking is a real threat to them. Again, it validates why we're doing what we're doing, but I think it's a serious threat to them. And I hope that the agencies will consider that and figure out how to destigmatize the adoption of technologies that will allow them to access more customers and new revenue sources. Because if they don't, that the open banking is just going to rip those customers and that revenue right out of those community banks, which I think is a major issue. And I'm not sure that I know attempts have been made, but I don't think anything has been done on a serious note. And that's one area of concern I've got just as a citizen. I don't think it's going to. I think it's a positive for our bank, but not for a lot of banks.
Sure. Definite impact on community banking and the priority of community banks to understand the landscape. Chris is a really good point. James, Melissa, anything else to add on this topic?
No.
Well, another thing that's been in the media or headlines, and it seems everyone in financial services is talking about, is AI, machine learning. What, from your standpoints, should our viewers or listeners understand about these technologies' impact on embedded banking partnerships? Do you see some changes in the technology landscape? Maybe, James, from the contractual standpoint. James, why don't we start with you?
Well, great. This is my worst area of technology and the actual stuff that Melissa and Chris are using real time in their banks. But I think it's a tremendous opportunity. Frankly, I think about behind the scenes utilization, like fraud detection. I mean, obviously that's an area where we need more. We need more tech tools available to the banks and the fintechs that are partnering with banks so that they can determine, when something is happening, you can apply, some reasoning to it. And so I look for a lot of behind the scenes utilization by the fintechs and the banks that are partnering in these partnerships, and what they're bringing to those relationships, and how the technology behind the scenes will benefit from the utilization of AI and machine learning. But I think it's also, and this is the part maybe where I really defer a bit, because gosh, I can't imagine that it's not going to also help on the customer acquisition, product design, the things that fintechs are really, really good at. And why I think that, that's the flip side of everything Chris is saying about, the banking is harder, and we need innovation there to continue to thrive as banks. And I think we're acknowledging that those fintech companies are maybe better at some of those things when it comes to customers and designing products they want and acquiring those customers, finding those customers. So I think that, the way that, I was at a presentation earlier this week, and there was one of these experts on generations, and they were talking about how young people don't Google anymore. I don't understand what you mean. And I guess if you're a young person, you go to TikTok, and that's where you do in the search bar, and that's how you find stuff. And I think that, that's what people are doing. And I think that's driven a lot by this, these things that are being presented to people that are using that software are curated in a way that before now we couldn't do. And so I think if you bring that to these banking as a service or embedded banking partnerships, it's got really exciting and things that maybe I can't predict on the customer facing side, but I really love it for the back end side.
Sure. A lot of applications, certainly, as we try and look at fraud and the massive amounts of data that is needed to prevent that, James. Melissa, maybe from the bank perspective, what are you seeing? What do you think? What should we know about?
Sure. So I don't think that you can attend a conference without having an AI track. It seems like right now it is the AI is everywhere. If we think about our business a couple different ways at the bank, aside from our banking as a service, us serving our customers nationwide, consumer and small businesses, we make it pretty easy for someone to come into the bank. And then we think, what does that look like for us to service them, to make them longtime customers who get what they need when they need it, how they want it? And so some of that is interacting with our app. Some of that is interacting with our customer experience folks on the phone, and then also chat and things along those lines. So we think about leveraging, to James' point, there's a lot of applicability on the operational side. We have it's actually part of our strategic plan to move forward some AI initiatives. And one of those is to really cut down on manual work that the people on our operations teams and or customer facing teams, maybe when they're reviewing a document, providing some specific responses to customers. And so we're really trying to balance you actually speak to a human and leveraging AI to help make that interaction much more seamless and frankly timely for the customer. So there's that piece of it. When I think about working with our fintech partners, our banking as a service group, we're doing the same. Fraud is hot and heavy on the bank side as well as on the fintech side, and so we just there's always somebody out there trying to figure out how to take money from you. Like, it's just a fact, unfortunately. And so we're trying to make sure that that detection is real time. We're focused with our partners to solve those kind of problems. And we're finding that there are a lot of technology solutions that are being built today, leveraging AI, data, a lot of data and analytics around customer behaviors. And so this isn't going away. I don't know if next year on the concert or on the conference circuit, it will be the buzziest thing, but certainly it is here to stay. And there will be applicability across our industry for many years to come, I think. But it is also a little scary. It really is at times.
Yeah, it certainly is on the conference circuit, and can be scary, but also, like you said, an opportunity. Maybe linking it back, Chris, to what you said, is if a bank can understand how to use this and why it's important, it could be a game changer. Chris, love to hear your thoughts.
Yes, Melissa, they'll be back to crypto next year on the conference. We'll just keep cycling these hot topics. But I think that's kind of the point. Really, these new things, quote unquote, new things come along, or newfangled ideas, and they become, headlines. They become the focus of concert circuits. But we look at it as just a continuum. The same way, banking is about deposits, loans, capital, liquidity, payments, and then technology, whether it's SaaS, AI, however you want to think about it. But that's all banking is, and it is really all about continuing to challenge yourself on the delivery of the products and services, where it went from the stagecoach, right? I've gone through these things already, And then we get to the bank branch, and then technology comes along, and it's not robust, of course. And then better coding happens, and then APIs come along, and then no code or low code functionality. And so this, to me, it's just an extension. And so the devil is all in the detail. It's not the fact that it's here that is nerve-wracking at all. I think it's just going to be a tremendous efficiency, enabler, whether it's complaint management, fraud, a lot of the back office stuff. I think in particular, I mean, we're in touch with friends of mine. What they're telling me they're doing on the front end in the user experience through the use of AI. They said it's been a 5-year accelerant to what they thought. And these are some of the best technology folks on the planet. And so I look at that and go, it's exciting, it's scary all at the same time. And so it's back to banking 101. Policies, procedures, right?
Yeah, kind of that risk management you were talking about, Chris.
The risk management. And the challenge here is going to be everyone doing enough work and enough education and comfort level, everyone being banks and regulators, to put the boogeyman back in the closet where he belongs and just talk about facts. And that's just going to take work. And so in this one in particular, I think it's going to be a very hot button, and we probably won't be bleeding edge on it, but right behind, because I think a lot still has to be worked out in terms of the understanding the models, right? You see enough out there in the non-banking economy or non-financial economy of, well, we thought the AI model was right, but maybe not quite so right. And when we're dealing with people's money and PII and privacy, there's really not room for that type of error. So I don't think it's quite there on some of the front end stuff, but on some of the back end, we have to be really clear that we understand what it is, and everyone's fully educated on what it is and isn't.
Great. Chris, James, Melissa, there's some questions that came in. Do you mind if I ask you the questions from the audience?
Not at all.
Yeah. First one, what would you say are the top compliance considerations for banks and fintech companies using embedded banking or banking as a service? James, maybe we can have you start this one.
Sure. I think that, we've analyzed all the regulatory enforcement actions that are out publicly, and then, we're privy to a lot of the ones that are non-public as well. And, by and large, the biggest area, probably 50% of all of those, focus on Bank Secrecy Act and failure related to customer due diligence and things like that. So obviously, that applies, no matter what the product is, and it's a big area. It's been a big area of focus. I started practicing law about a month before 9/11, and, Bank Secrecy Act was huge right after that. And so I think it will just continue to be a big issue. In the payments space, so that, really deposit products, any kind of credit products, in the payment space, we spend a lot of time, with money transmission type issues and people worrying about whether the structure is creating issues. It's not as much about the consumer, the customer focusing. A lot of those are B2B anyway, but we spend a lot of time on that. And then I think in the credit space, it's from a compliance standpoint, it's just if you look at all those enforcement actions, you'll see that half of the other half are related to just whatever the product is that's a credit product, whatever law applies to that, and whether you're complying with it. So if it's a mortgage product, we're worrying about compliance with RESPA. If it's a different kind of project, maybe we're worrying about compliance with some other particular law, or maybe UDAP, is a general kind of catch-all consumer compliance. But also on the credit side, we worry a lot about, one of the things we spend a lot of time on is kind of the state level true lender issues associated from banks partnering with fintechs to originate credit products, and the problems that is caused by the patchwork of state law out there. But those are the big things that we spend a lot of time on, kind of broken up by what product we're talking about.
Know your customer, CFT, countering the funding of terrorism, AML, BSA, and then really looking at the product and kind of that aspect. Did I hear you correct, James?
Yeah, you heard me. Yeah, all that stuff is what I mean when I say BSA.
Okay, great.
Yeah.
Yeah. Melissa, what do you think, from your perspective, top compliance considerations?
Well, from our perspective, we always want to have a direct relationship with our partner. So outside everything that James said is critical. I mean, essentially, we have to make sure that our partner is doing everything that we do as a bank, right? So that means properly identifying a customer, monitoring those customers' transactions, et cetera, et cetera. And these are critical third parties to the bank, which means that they have to be held to a higher standard when we're performing due diligence on the entry point of the relationship, when we're contracting, when we're actually understanding, how where their data is stored, how they serve customers. Customer complaints are a biggie. Can a customer speak with someone at the company easily and get a problem resolved? If we have a customer at the bank, they call the bank and the bank helps them. But as an extension of the bank, we need to make sure that those things are happening. So we have a really pretty formal process at the bank around how we go through a diligence process, how we evaluate a partner, and then frankly, how they even go through approval and onboarding. I would say from a visibility perspective, executive management is aware. We have a committee that approves these deals, and then our board has visibility as well. So if you're to start thinking about what it looks like to manage a program within a financial institution, I think having the underpinnings of a process, a policy, and committed individuals on staff, that is a winning team, honestly. But yeah, all the hot button things. KYC is a biggie for sure. Got to get that right.
So third-party risk management, having the right talent at the bank to know what they're doing. I think I heard you say also.
Yeah. Yep.
Chris? Yeah, definitely. The only things I would add, I agree with everything that James and Melissa both said, but maybe the other thing that we focused on in addition to those concepts are the relational aspect and how much the relationship, right? And that's part, there's KYC certainly on the end user, but also on the partner. So at Thread, we think of each of them as branches of the bank, which can ruffle some people's feathers. But it's a really, I think, strong concept to establish. This is the bank's, all these things at the end of the day are the bank's responsibility, in the same way that one of our owned physical branches or a digital branch that was of the bank's ownership, they all apply. But having that relationship with the branch manager, right, for the person, the executive who is responsible for your partnership, is critical, because despite the best diligence, the best BSA attorneys, the best contracts, things happen, obviously, all day, every day, just as they would. So we try to demystify it just as they would in a physical branch. Tellers or CSRs are going to make mistakes, right? Somebody gets through, maybe they didn't get the right form of identification, whatever the case might be. So there are analogies in the digital realm, and the solutions for these are really based on the relationship and that direct connectivity that we have with our partner, and ensuring there's an open line of communication, that when something goes sideways, oftentimes it's committed by fraud that a customer is trying to commit or has committed, or something like that. And if that strong relationship, strong communication, and oversight from the bank, but a two-way partnership and two parties to that is probably the most critical compliance, one of the most critical aspects of the compliance program as it sits. So we get told early, we get told often when there's a problem, just like we'd expect one of our branch managers. We're not in that, Bank of America executives, CEOs, they're not in Bank of America branches all day, every day, right? They rely upon a really strong oversight of those. And so it's really just the same thing. It's more complex and more complicated in some regards when it's the company who's providing the W-2 to those folks interacting with the end customers are not the same as the bank. And so that denotes the additional effort and complexity that is involved.
Great. Next question is, what future trends do you see in the intersection of AI and data analytics? Melissa, maybe do you want to start this one?
Sure. Yeah, I would say banks historically, if you read about banks and them reviewing their data, and there's so much unmined data, banks aren't using it. They really don't know much about their customers. I think to some degree that can be true, but then there are other institutions who have focus areas like we do around really understanding who banks with us, why they bank with us, how some of their likes, dislikes. I mean, I actually think it's going to AI and the data components. I think they will intersect more around customer preferences, and they already have to some degree around customer preferences and this notion of maybe what's next in someone's journey, things along those lines. I don't know that it's going to, and maybe some of those recommendations will be right and some of them won't be, but I believe that will continue to be more personalized, proactive, and timely. I think we'll see that AI and data insights more married as time goes on. There is also something I was going to say earlier about AI. I think one of the challenges that institutions will have, like us and others, is going to be how they manage the notion of transparency around whether you're interacting with a live person or potentially AI being leveraged. I think there's been so much out just in the world around AI that has nothing to do with financial services, where people aren't sure who is who, right? Who is the real person and who is an AI generated voice, et cetera. And so I think that will be something that we will have to tackle around AI and transparency with customers so that they feel the notion of being served and not just a number, if you will.
Not just being pandered to or sold something.
Yeah.
Chris, maybe how about you next?
Yeah, I don't think there's much to add. It's the power. Most of these things in my mind always cut both ways. I mean, there's a lot of power that you can use for good and for bad. And so it's about, individualizing, looking at, how do you use these tools? How do you, the intersection of AI and data analytics, it's garbage in, garbage out if you're not thoughtful about how you construct these things and what you're trying to do with it. And ensuring, like Melissa said, I think that's where the boogeyman is real, because it's accelerating and quite rapidly. And it's funny, so I've got this, I guess maybe characteristic, back from I was in the military for almost a decade. And so I'm extremely risk averse about things that I can't understand, the risk of. But once I know it, I'm very much a risk taker, and even more of a risk taker when other people don't understand it as well or haven't taken the time, and the bid-ask spread on it becomes wide. I'm not sure that I see it yet. I know it's important, but I don't think we quite know it yet. And so that's why we're so cautious on getting too far out there, and want to see some more work and more development, more regulatory interaction on it.
Definitely.
And you see it. So if you look at, we're not regulated by the OCC, but acting comptroller Sue, you see, I think I even saw a headline this week, of him imploring thoughtful policies for banks around AI. I mean, I've seen this movie before and I've seen the pattern, and there's a lot of concern and fear about the unknown, and it's coming from the highest levels. And so, kind of measuring 3-4 times, cutting once seems to be the order of the day with this.
Sure. James, would you like to add some color to this?
I don't think there's anything to add. I mean, I think that's right. I mean, tremendous opportunity as we start to figure out how to make it better, and looking forward to it, frankly, because I like innovation.
Sure. The last question group is, what role could AI play in analyzing large volumes of data generated by a BaaS platform or embedded banking platform? Anything we'd like to add there, or have we touched that?
I think so.
How about we just say large role?
Large role.
A large role for a large volume. How about that, James?
Yeah.
Well, if you have any more questions, audience, please put them in the chat. One of the questions that we had come up with as a panel is really thinking about the payment space. It is evolving, certainly with same-day ACH, FedNow. There are many considerations for the originating bank, the ODFI, and the fintech. What are some things that you've observed from your experience group, or developments you'd like to talk about, or things that we can share with the group? Melissa, do you want to start us out?
I'd be happy to. So I'll start with, the headline is, everybody wants to move money as fast as they can, right? I mean, our partners want to, our customers want to, I mean, probably we on this panel, like, what is the fastest, most effective way for me to get money from point A to point B? And a lot of our conversations at MBKC and also with our partners, who we have regular cadence meetings with and constantly talking to them about what's next, is all about that faster money movement. We process same day ACH today. We're in active initiatives around FedNow and RTP, but that isn't live at our institution or with any of our direct BaaS partners today, our partnerships. But there's this notion of push to card. Money is being moved like crazy on push to card. Of course, same day ACH, and then really just thinking about the risk that is associated with each of those rails, whether we're the ODFI or we're the receiving institution. There is still the requirement, as James sort of outlined earlier, like, where is this money coming from? Who is this customer, and where's the money going? And so the faster money moves, the less time the bank or our partners have to evaluate that relationship, scrutinize the transaction and things along those lines. I mean, as banks, we've been doing wires forever, right? The wire is gone. It's typically gone. Can we get it back sometimes? Sure. But we're finding that those chunky dollars are moving out in large swaths and or smaller swaths. And it's just much more important that we have the ability to scrutinize transactions as they're coming in immediately and before they're leaving the bank. Because frankly, I mean, fighting with other institutions and or against fraudsters trying to get money back is really a really large challenge.
Yeah. No one's a winner, including the customer, I'm sure, Melissa, in this situation.
Unfortunately not. Yeah.
Yeah. Maybe that AI and the large volume of data question can address some of these things you're talking about. James, I think this is probably an area you work with your clients in, and love to hear your thoughts.
Yeah, I think that what Melissa said is right on. I mean, I think that once you interact with embedded payments, it's very difficult to go back. I think we all see that as consumers, and purchasers of things ourselves. I mean, the notion of me typing in a credit card somewhere is just, I don't know if I'll ever do that again. And so we spend a lot of time, dealing with these novel kind of arrangements, these multiple, these arrangements that involve potential use of multiple rails, and then also just kind of rationalizing it. I was the other day, I was trying to send some money from one bank to another bank, as a personal thing, and I could send $10,000 with Zelle with my face. But I think I had to call somebody to send the same amount of money by wire, and then they were going to email me something, and I was going to have to fill it out, and I was going to send it back, and that kind of rationalization, I think, is where we see a lot of payments innovation, is taking some of these old things and some of these new things, putting them together to get efficiencies and cost savings, and trying to use the right rail depending on what the needs are. And then I think another thing that maybe I see that that's a little bit different is this disruption in the value chain, right? There are now ways, more ways today than there were last year for payment companies to disintermediate the bank. Maybe because they become a bank or they become a limited purpose bank in theory. We haven't seen a lot of that in practice, but we spent a lot of time talking to people about that want to do that very thing. And on the flip side, you see these payments companies that are eliminating, and banks that are eliminating the intermediaries and vertically kind of integrating all the way down the value chain so that you don't have all these intermediaries between the merchant or the consumer and the bank, and you're taking out those intermediaries. And so that's where I think I see a lot of rationalization and efficiency plays around the actual product design, but also just structurally, who are the participants?
Sure. Chris, thoughts or anything you'd like to share?
Yeah, I think maybe on the need, it's kind of like AI, the need for it. We all recognize that. And I think for banks to not recognize the need to participate in these and to figure out embedded payments and the speed, like Melissa said, everybody wants to move their money, including us. I don't like holding on to, any longer. And so if you're in the business of money, which by definition is what banks do, you've got to be all the way in and competitive and providing what customers want. And so, I think there's been a lot of people out there that said, "Oh, I don't want money to move faster out of my bank." Well, what about the flip side is, how about it moves faster into your bank because you're offering these things, and it's those kind of, I don't want to have ATMs because I may lose all my teller. It's that kind of paradigm that is just here once again with this. So it's an unquestioned thing that banks have to figure out and how to do it well. But these are corollaries to wires. It's a loaded weapon, and anyone doing it, the education level has to be really high for the consumer or the small business or whoever it is whose money it is. For the partner, if it's in a partnership, who has the risk, who has the approval, and the money's gone. Yeah, hopefully, maybe, sort of, we could get it back if there's a problem, but that is not the model. You just got to assume that you press that button and the money is gone. And so there's a lot of work to do around that. And I think that's why you've seen the adoption of FedNow be pretty slow. RTP just had a lead on it, in terms of the calendar. But I think, like with all things, there's a ton of utility and the demand is there, and we'll get there. It's gonna be a bit slower, I think, than people expected.
Sure.
I would probably add one thing, Robert. There's this constant balance between risk and access, right? So as a financial institution, our responsibility is to keep safely our customers' funds and be a steward to a degree of security and safety, right? And then, so we do that and then we provide access to modes to move money out of the bank. They have their debit card. Some people still write checks, and then all these other moving money via ACH or wire, et cetera. And, banks, we sit around a table a lot. We listen to our customers. What is their feedback? I want to move more money. So to your point, James, like, why can't I move more money this way, et cetera, right? Why do I have to jump through all these hoops to move this money? And then there's this risk conversation at the bank around, like, how safe do you keep, how do you make sure that you have the right balance, that you provide the customer the access that they want, but also make sure that you balance the occasions where it isn't the customer that's moving the money, or, there's some type of fraud situation, et cetera. And so it's a constant balance. I don't think anybody has fully figured it out. And frankly, I know that there is a little bit of a cost of business. Us moving money quickly, we have to understand the risk, but we are going to suffer losses as an institution. It's just, how do we minimize that for our customer and the bank, right?
Sure.
So
I love how you brought up balance. Maybe that's a great intro, Melissa, to our next question, actually. Many people tuning in want to know from the three of you, what are some of the best practices that fintechs and banks or other financial institutions can do to foster a really mutually beneficial partnership or a balanced partnership? Chris, do you want to start?
Yeah, I'll probably sound like a broken record. It's I think a lot of things that we've covered so far today, and they go back to basics. Everything I need to learn in life, I learned in kindergarten. Is a book I've added in the Air Force onto the end of it, because it's kind of the simple things: transparency, clear delineation of who's responsible and accountable to whom, strong contracts, and really doing the hard work of building relationships with your partners that you know them, they know you. Because when you're in a foxhole, you really better hope that you've had a relationship with that person before you get there, right? And that's so none of this stuff is new to banking or business or just kind of good personal life management. I don't think.
And move the technology out of the way and just go back to basics, maybe, Chris.
That's right, and it's going to then you can actually fully leverage the power of the technology, because you've built trust, right? You've built a working relationship, and it's much more natural that way.
James, I know this is an area you're in all the time. So what would you provide to viewers?
Well, Chris already gave the plug for contracts and by extension lawyers, so appreciate that. But I'll say, I'll just talk about the other things. I mean, the drum that the regulators are beating, and I think that to the extent our, the fintech companies that are listening to this are understand and appreciate this, the better off they're going to be. Is due diligence is so important. The banks are required to really do a deep dive about their partners. And so fintechs that are prepared for that and enable that and encourage that, frankly, it's no different than, if you're trying to sell your company and, you're expecting an M&A due diligence, you put a data room in, you make it really easy, and you get more money usually. So, due diligence is key. Monitoring. I mean, that's where we're seeing a lot of the scrutiny and the failures that have led to some of the scrutiny is poor or non-existent, oversight and monitoring. And, that is something that's going to dramatically change. I think that's where we are beefing up our contracts and our rights that we're putting in there about our bank's ability to come in and look at stuff. And, when I ask for something, I want it within 24 hours. And, I want to be able to have real-time access to this set of information. I might have to rebuild this ledger from the ground up. I need the information to do that. So that monitoring and that oversight, not only in the contract, but also in real life. I think that, as Melissa said, it's, you got to have before any bank gets involved in this, they got to have the policies and procedure and the personnel to do it. And that's where I think you're going to see a lot more focus on a go forward basis is forcing those personnel to really get in there and do it. And then I guess the last part I would say is a prenup, right? Everything comes to an end. Every bank partnership is going to come to an end at some point. And it can be we can do it the easy way or the hard way, right? And so I think that to the extent that there is a recognition of that when everybody is getting along, when there's not pressure, maybe from third parties, from consumers, from regulators, when, let's envision what this wind down is going to look like. Let's envision how we're going to work together, how we're going to work separate. Are there things, records and other things that are going to immediately change hands, and different things like that, I think is where today, right now, as we're putting programs together, those are things that maybe we hadn't thought as much about a few years ago, but now that everybody is sort of acknowledging that, nothing lasts forever, there's more focus on that. So I think that, fintechs, you just realize your bank is only as good as their worst partner. And so you want your bank to do these things and be ready for that and facilitate it.
Great advice. Melissa, a few minutes left. Would you like to conclude? I know you live this and you lead this. So
yeah, sure. Well, for the sake of time, just in the event you want to take more questions or something, I'll go quickly. I don't think this could be a part-time job for anyone at an institution. So I think 5 years ago, years ago, there was this notion of, well, I'm just going to sort of dip my toe in, consider what this can look like. Maybe it can change our business, et cetera, et cetera. Today, I think the emphasis really should be on what does it look like? What are we strategically trying to accomplish? And what kind of team do we need to manage this on a daily basis? Maybe some of that's outsourced. Maybe there are compliance resources or legal resources, et cetera, that are outsourced for some of that as you start to build. But I think there is an expectation, and frankly, it's just going to be a best practice for someone to fully own this initiative if in fact you're chasing banking as a service relationships. And then from there, make sure you don't hire in arrears. You can it could be problematic to have partners who scale really quickly and not have the resource to, interact with them on a regular basis, understand any challenges before your regulator comes in and acknowledges those. And so I just think that dedicated staff is super important. We didn't start with a team of 40, but that's what that looks like today across our organization. And they're dedicated to our partners day in and day out. So
great advice, having the infrastructure and talent. Well, I know we're at top of the hour. Chris, James, Melissa, thank you so much for allowing me to moderate and learn from each of you. If there's any final questions from the viewers, put them into the question and answer or the chat, and I'll leave it up to the three of you to sign off or say any last words.
Chris, thank you for your service.
Oh, well, yeah, my pleasure. It was a while ago. I'm feeling kind of old.
That's okay.
Yeah,
Still, thank you.
Appreciate
Thank you, Chris.
All right.
Yeah.
Thanks.
Well, thank you all for having us. Thank you, Robert, for keeping us straight.
Oh, you're welcome.
Have a good day.
Thank you so much.